The CPI came in hotter than expected and the market took a dip, but then got bought right back up. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on the replay or on YouTube, do me a solid and get down there and hit that like and subscribe button. Make sure to click the bell icon next to it because you're not going to want to miss any webinar coming up because the market is going absolutely nuts. Now, if you remember from last week's webinar, and if you haven't watched it, I highly recommend you go back and do that before you watch this one. We talked about what was happening on Tuesday, and that was going to be the release of the CPI data. And well, wouldn't you know, it came in just a little bit hotter than expected. Now, admittedly, it was only about 0.1% higher, but the market did not care for that one bit. And we had a huge gap down, here on Tuesday. Quite a bit of selling going in, and then we kind of found this floor here right around 49.30, 49.25 thereabouts, and it just got bought back up, and we made a really solid push to the end of the week to try and reclaim that all-time high here right around 50.56, but didn't quite get there, closing Friday on a red day. So it's going kind of weird out there, guys. Obviously bad news is bad. That's good to know that the market still understands that, because sometimes I question where the market's head is at. Yeah, with inflation data coming in hotter than expected, we definitely got the gap down, but we did not get any continuation. And instead, this was viewed by some people as a dip buying opportunity, which is exactly what they did. This, sell-off got bought up fairly quickly going into Wednesday and Thursday. Bit of profit taking on Friday to close the week, on a red candle, but in general, pretty flat, all things considered, on the week. A little bit down, if we're going to be completely, if you want to worry about the semantics, yes, it was a slightly red week, but look at that buying pressure there. And what we're really seeing right now is just buying euphoria, for lack of a better term. People are just going, risk off. Any dip is seen as a buying potential, and so far that has really held true. We have had these dips down, but they get bought right back up, and then we have this dip down and it gets bought right back up. And so this is a pattern that seems to be repeating here as of late, which just tells you there's a lot of people and a lot of institutions out there that are really looking to go long at this point and are buying. And I do not believe this is shorts getting squeezed out at all. This is definite buying pressure that we're seeing here. And a lot of that is in the semiconductor space, which we are going to touch on a little bit later here. So that's not something you're going to miss. So make sure you stick around for the rest of the webinar. But let's take a look here at the breakdown for the S&P 500 and see what's going on, so far. Now, we've talked about tech and communications still being the big dogs, but we are starting to see that come down a little bit this week. We did get a nice little run up into Thursday and then definitely tipped down a little bit on Friday going into the close. Financials and healthcare looking pretty solid here so far this year, up nicely, though underperforming the S&P 500, which really shows you again that tech and communications are propping up the market. So, if something happens in the semiconductor sector, which again, we'll talk about here in a minute, that could be very, very bad for the S&P 500, being propped up basically by two sectors alone. As I mentioned, healthcare and financials basically neck and neck here, right under 5% on the year. We've got, consumer discretionary, energy, consumer staples here right around the 1% to 0.5% up on the year. And the two underperforming sectors right now are utilities and real estate, really down on the year so far. Both of them right around that -5%. So we're seeing a very big, disparity between, the top and the bottom, for lack of a better term. We're seeing that, tech and communications just riding high, kind of like they did going into last year, or the end of last year, I should say. While, energy starting to perk up a little bit, but utilities and real estate really just suffering at this point. So let's see here what's going on in that energy sector, because oil continues to rise. We started seeing this, this buying last week, and we're definitely kind of as Rid would say, melting upwards here on oil. Definitely an uptrend, as you can see by our trend line here. We're making a very nice move towards the upside, but we are having problems right here. We've been here before, right around the $78 per barrel mark. And it looks like we closed the week at 78.46 per barrel for light crude. So really kind of hitting that top before, looking a bit like a double top formation. We'll have to see if that actually holds or not, or if we continue to see, increased oil prices going into next week with everything going on around the world. Let's see here. Gold not really doing anything, to be honest with you. This is mostly just sideways movement. We're really consolidating here on gold. Yes, we made a run up to the all-time high, and then we sold right back off. Nothing too exciting here in gold. No position that we are looking to take. But if you are looking to take a position in gold, just be aware of how it's trading at this point. And kind of keep an eye on it, because there's definitely a lot of things going on behind that. Taking a look here at the bond yields in the US dollar, a very nice rally in the bond yields this week from last week as well. Actually, even from the beginning of February here, if you look for the last 2 weeks, basically, really making a nice push up, with the 2 years being the top dog again, followed by the 30-year bond yields. And then the 10s are, still the lowest yielding bond so far at 4.28%. While the 2 years are yielding, about 4.64%. The dollar, as we mentioned last week, likes to do this leg up, consolidate, leg up, consolidate, leg up, consolidate. That's really what we've been doing here, this little stair-stepping movement up and up and up as we go. Obviously, there's a lot of things going on around the world right now. There's a lot of geopolitical pressures going on. There are things going on in the Middle East. We've got things going on in Eastern Europe. The South China Sea is looking hot. Korea is looking hot. Lots of things going on. And in times of trouble, people will run back to the world reserve currency. And as of today, that is still the dollar. And the dollar is looking pretty good, if you ask me. Very healthy at this point. No concern about that losing its world reserve status anytime soon, if you ask me. Now, let's take a look here at the important dates in the market and the earnings calendar. And, well, there's really no important dates in the market this week. We have the FOMC minutes on Wednesday, right at 2 p.m. Eastern time. So that will be something interesting to see what they have to say. But, I will say, in the past, what we've seen is, when they deliver these, especially if Powell is talking, the market will react during his speech, typically. But after that, things usually kind of cool off a little bit and get back to normal. So expect a lot of volatility during the discussion, but, after that, you shouldn't see too much. But what's really going to move the market this week is earnings, and we've got some big ones here to talk about. Some big names coming in starting on Tuesday. There's really nothing going on Monday. Be aware it is a holiday, so we will not be trading, if I'm not mistaken, on Monday. You can correct me if I'm wrong, but as that is President's Day, you'll notice there's nothing reporting before the open. After the close, nothing really interesting there, but Tuesday is when we get started. We got Walmart coming in. That's the #1 retailer, or brick and mortar retailer, I should say, in the United States, going to be reporting before the open on Tuesday. So that's going to be a big name reporting there. Home Depot, if you like to do home renovations like I'm doing right now, definitely another name to keep an eye on, but not as important as Walmart, I would say. And after the close, I'm not really seeing anything here that's jumping out at me like I'm ready to get excited about it. TDOC has always been an interesting mover in the past, of course, back during the events of 2020 that we shall not, mention. Teladoc definitely got a nice big boost there, but after that, things have kind of slowed down. Let's move on to Wednesday. Before the opening, yeah, nothing. After the close, we've got some really big names, and that will be Nvidia right here at the top. That is going to be an interesting one and could really send some ripples in the market, to say the least. If you're into electric trucks and things like that, Rivian is here. Yeah, Riz has made his feelings about that company rather clear in previous webinars, so we won't be looking at that very much. Etsy, another one if you like home projects and you like cool stuff, definitely something to keep an eye on. But Nvidia is the big name here that's really going to make a move in the market if anything happens. Thursday, Moderna, of course, a big pharma company, going to be reporting. Not really seeing much else. If you need some, cheap work, Fiverr's going to be reporting as well. And then if you need furniture, Wayfair is there. But again, nothing really spectacular here. After the close, yeah, nothing really there either. And Friday's looking pretty grim as well. So really, honestly, everybody's looking Wednesday after the close of Nvidia. And that's going to lead us perfectly into our next discussion, which is the current bubble in the market right now. But if you are here on our live recording and you do want to post a question, now is the time, please, because Riz isn't here, so Chris is going to get you done and out of here quickly because you've got better things to do on the weekend. All right, so let's talk about semiconductors because right now the semiconductor sector is, well, inflated seems to be a gentle way to put it. It's just going nuts. And we're going to kind of use a little bit of the case study here in SMCI. Now, this is one that I would basically say was I'm not familiar with this company. I've never heard of it before. And you look at it and making a move like this off of AI hype. Obviously this is a semiconductor company that is capitalizing on all this AI hype right now. Of course, I know Riz was looking to get in short on this. I'm not going to comment on his positions at this point, but if you're an elite, you know. If I should say. But this is a really good, you know, description or case study, as I should say, of one thing, what hype can do to a security here. We get this, obviously here earnings were good, but even prior to this, it was just starting to run up. And let's look here. How much has it gone up here just this year alone? And I will do it from where it is now. Actually, no, let's do it to the top. How much it went up. A mere 287% in 45 days. That seems legit. No problems there. Let's look at the actual year to date. It'll be a little bit less, but not much. 186. There you go. I think my measurement was off a little bit. But yeah, 186% in a month and a half is absolutely insane and really shows you what hype can do to a market. Now, we were talking earlier before the webinar started, and I mentioned it before, Nvidia being a big name. Look at how overbought these securities are. SMCI was even better. I mean, this is the greatest RSI chart I have ever seen in my life. Honestly, this is comical. How high did we get up to? 98, almost. It looks like. 98, 96. That is insane for RSI. Now, of course, we did come back down, but not before touching over almost 1100 on this. And so, what we're seeing right now is an absolute, euphoria, but yet a bubble forming in the semiconductor space at this point. We're going to take a look at Nvidia here. These things have been riding high on the AI hype for far too long, are way overdone. Even Nvidia is way overbought. And we've got earnings coming up on Wednesday, like we talked about, and that could really shake things up quite a bit very quickly in the market. Because if this sector takes a dip, oftentimes what you'll see, like with the big name like Nvidia or something like that, reporting earnings, you will see what's called a sympathy move in the same sector. So you look at securities like, hang on, excuse me, sorry. AMD comes to mind as a perfectly great example. Not as overbought as Nvidia is, but still making a rather big move here over the last couple of months. And what can happen is if Nvidia earnings don't come in as hot as people want, and people start selling off, or perhaps guidance is a little bit lower than expected, you can see AMD make a pretty big move along with Nvidia if those earnings don't go well or the call is not as hot as people want it to be. Or perhaps they don't say AI enough times on the earnings call. That's obviously what they need to do right now. But the truth is, AI really has kind of slowed down a little bit. I mean, of course, everybody was hyped about Chat GPT, and now we have all these competitive, AI engines out there available for you. We have the image creation software AI stuff that puts 6 fingers and 7 toes on people. And it's just comical. And the truth is, it's not really where people expect it to be. It's not Skynet, guys. That's just the truth. Now, could it possibly be there someday? Maybe. But I'm not going to hold my breath that it's going to be happening this year because the AI sector is really kind of slowing down at this point, and semiconductors are still riding high. And sooner or later, this bubble is going to pop. We've had bubbles before: the dot-com bubble, the real estate bubble, the tulip bubble. All of these good things that have happened in the past. And the truth is, you can't just keep going on and on and on. You can't always go up. If that were the case, Nvidia would be a $10,000 stock at this point if it just kept going up all the time. But the truth is, we have ups and downs in the market and in sectors as well. We have sector rotation, but right now, we wanted to make sure that you were aware that semis are going a little bit too high. As they say, flying a little too close to the sun. For all my Greek mythology references out there, would be Icarus and Daedalus. Yes, I did. I am a mythology person myself. So you fly too high to the sun, sooner or later your wings are going to melt off. So be aware of that. Semiconductors going a little bit nuts. Be definitely cognizant of earnings on Wednesday for Nvidia and how the stock moves after hours, because that will more than likely make a big impact on the S&P 500 in how it's going to go. Now, if those earnings come in hot and everybody's still buy, then expect the market to continue to rally. However, don't expect that to stay there forever. So just be careful with your positioning. I think that's really the important thing. And the biggest takeaway I would like you to take from this webinar is, if you have long positions and they're doing well, it might behoove you to consider taking profits. Now, I'm not a financial advisor, and I'm not going to tell you what to do with your money, but this rally is pretty impressive, and I don't want you to miss out on profits that you would have made from that. So I would be very hesitant on taking new long positions if it were my money. I'm not going to be taking any personally because I feel like this is overdone. But you know what? If you don't think so, and you think that the market has more space to go, then by all means, buy in, but don't come crying to me if the market rolls over after those Nvidia earnings and the bubble pops. So that's my 2 cents for what it's worth, which is probably less than 2 cents. I hope that everybody has an absolutely wonderful rest of the weekend. I hope that you all stay safe out there. Have a great time. As I always like to say, don't do anything I wouldn't do. And we'll see you in the market on Tuesday, because Monday's a day off.